Good morning, you're watching Market Cafe on ET Now with me Shreyansi Singh as well as Lisa Fernandez, and over the next 1 hour we'll take you through news and updates from within the country and across the globe, as well as tell you which stocks to look out for in today's trade. Now, good morning, Lisa.
Good morning, Shreyansi. Good
how
morning
are you?
To your viewers.
Absolutely, and how are you looking at the handover coming in from the US markets?
We can say all's well that ends well because December is looking pretty good, you know. If I talk about the individual indices, S&P 500 index, they gained 0.6%, and it's about the same percentage from surpassing its record close. Dow Jones, it rose around 251 points, or we can call it 0.7%, gaining for the 7th straight day. Same goes with Nasdaq. It advanced 0.7% first time, and its first time closing above that 15,000 level since the last level it was seen in Jan 2022. Well, talking about sector-specific, energy stocks was the sector that outperformed because the oil prices rose. As we know, it's on the issues going on at the Red Sea. So talking about all three major indices, as I pointed out, it's going to finish December with gains. And talking about the macro data that has come up, the November housing starts, that also came in stronger than expected. So all eyes will be on the US CB consumer confidence, which is slated for release. And talking about the earnings that came out, FedEx, it slumped around 9% in extended trading, and this was on a disappointing outlook given by the company. Well, talking about stock futures, now it's currently trading mixed with only Nasdaq in green. So that's the handover coming in from the US market. But moving on to the European market, it mirrored almost the same gains which US market also saw because it closed higher. But Swiss regulator, they called for more powers, and this is after the Credit Suisse the collapse that was witnessed because Swiss Financial Market Authority, they have said that alongside the government and the Swiss National Bank, it had achieved the aim of safeguarding Credit Suisse solvency as well as ensuring financial stability. So if I talk about DAX, it's up around 0.6%, and FTSE is also up around 0.3%. So it's largely looking good for both the US as well as the European handover coming in, Shreyansi. But what about crude as well as commodities check? What's the update coming in from there?
Absolutely. So there have been some really sharp moves earlier this week. Now, if you look at yesterday, they did rise, and as tankers shunned the Red Sea on the back of heightened attacks by Iran-backed Houthi militants, which have disrupted the international shipping routes. Now, when you look at the WTI contract for January, that rose around 97 cents or about 1.3% and settled around that $73 a barrel mark. Now, when you look at Brent also, that also gained about $1 and about 1.6% to settle around that $79 a barrel mark. In recent weeks, Yemen's Houthi rebels have launched a series of drone attacks against commercial ships crossing the Red Sea. Now, if you look at major shipping lines and oil transporters, they've suspended travel through the Red Sea on Friday after more than a dozen vessels came under attack since the start of the Israel-Hamas war in early October. Now, shipping giants like Maersk and all of the other shipping majors, they've also diverted all scheduled journeys with immediate effect. When you look at and BP also on Monday, they also announced they've announced that they've paused shipping through the Suez Canal on the back of what they called a deteriorating security condition in the Red Sea. Now, in terms of brokerage views coming in, Goldman Sachs does see this overall impact of all of this to be a little bit limited. And when you look at the US, they've pledged an international effort to combat the situation, expanding the force in the Red Sea to safeguard against the attacks. So, Lisa, it wouldn't be wrong to expect that there would be some volatility because, we've seen a lot of sharp moves, and it's just it's going to be day 3 today.
Right, so that was on crude as well as other commodities check. But let's look at the events that we have to keep an eye on. UK CPI, US crude oil inventories data will be out along with the US CB consumer confidence. Back home on the corporate action front, we have Flair Writing Industries that will report earnings. Anand Raj board meeting will be held, and this meeting is related to the finance as well as the investment committee. They will be holding the meeting. Salasar Techno Engineering, they will be mulling on the declaration of bonus shares. So keep an eye on these counters. Well, on the IPO action front, the companies that will be listing is DOMS Industries, India Shelter Finance Corporation, and also the company that will be opening for subscription is Azad Engineering. So lots of action on the IPO front, and it's also the last day to subscribe for Muthoot Microfinance as well as Moti Sons Jewelers and Suraj Estate Developers. So yes, that was on the IPO on the primary market. But the other events that we have to look out for is Byju's AGM that will be held, and also government will be launching the 9th round of commercial coal auctions, and it is day 2 of IPL auction in Dubai. So all these are the events that we have to keep an eye on.
Also take stock of the Israel offense in Gaza as they continue to pound over the Gaza Strip, as Israel's Prime Minister has again reiterated that the war will not stop until 129 hostages are freed. Meanwhile, Prime Minister Narendra Modi also held talks with Netanyahu discussing the safety of maritime traffic. This comes after Houthi militants continued to target shipping vessels in the Red Sea and Suez Canal. On the other side, the UNSC vote on a draft resolution got delayed once again and is now expected to be today.
And the latest coming in from the Red Sea disruption, shippers have diverted about more than $30 billion worth of cargo away after facing threats from the Houthi militants in Yemen. At the moment, there are around 57 container vessels sailing the long way around Africa instead of cutting through the Red Sea and the Suez Canal.
And shifting gears then, Bank of Japan has maintained the ultra-loose policy settings in a widely expected move. Bank of Japan left short-term interest rates at negative 0.1% and said it will continue with its asset purchases as well as monetary stimulus measures. The central bank also made no change to its dovish policy guidance, dashing hopes amongst some traders that it would tweak the language to signal a near-term end to negative interest rates.
And shifting focus on the global earnings then, package delivery giant FedEx has once again lowered their revenue forecast as weaker demand has hit sales. Now meanwhile, the Q2 revenue that fell short of estimates and the shares stumbled almost 9% in after trading hours as the company expects a low single-digit decline in revenue for the fiscal year.
Let's also switch focus to Accenture then. Accenture has posted steady set of numbers for the first quarter. Revenue for the quarter came in at 16.22 billion versus the expectation of 16.19 billion. Now, meanwhile, the tech major also said that it expects top line in the second quarter in the range of -2 to 2%. Anisha Jain is standing by with all of the number crunching. Anisha?
Well, it looks like that the company Accenture has actually posted a decent set of numbers. It's a slight beat when you look at quarter one performance coming in from the company, because the revenue growth has come in 3% in dollar terms and 1% in local currency. The company has actually maintained its full year guidance as well, so they're expecting a growth of around 2 to 5% in FY24. Definitely a good news, because a large part of the street was expecting that there could be a trim down towards the higher end of the range. So that hasn't happened. That means they're hopeful of a recovery as we get into the second half of this year. In terms of the other details, yes, there is a slight bit of disappointment, if you must, as far as the Q2 guidance is concerned, because there they have left open the door for a decline of up to 2% to a positive number of 2%. So that's a bit of a weakness. But do remember, this quarter usually is marked by furlough, so that should be taken well by the street. In terms of the other details, the new bookings have come in at $18.4 billion, which is an increase of 14% on a year-on-year basis in terms of dollar terms, and 12% growth in local currency. So that also comes in as a good news. I just wanted to mark that it is the consulting revenue that still continues to be a bit weak, because that has been a bit of a pain point. So the consulting revenue was actually down 2% in local currency and 2% down in the constant currency and flat in US dollar terms, while the managed services managed to report a growth of around 5% in the constant currency terms. As far as the markets are concerned, North America still continues to show a bit of decline, though it's EMEA which has bounced back quite sharply. And in terms of the verticals, the communications vertical was a bit weak, 10% lower, while financial services has actually managed to report a growth of around 2%. So that should be taken well by the streets. So overall, my guess is that there are no new negatives per se in this earnings. A bit of weakness in Q2 should be pretty much okay, given that the company has maintained its full year guidance. I think in the pre-market, we are seeing a bit of a negative reaction on the Accenture stock, but hopefully that will get recovered as we, head later into the day and we hear more details from the management in the con call.
Thank you for that, Anisha. So that was on Accenture maintaining its full year guidance. But we also have Sandeep Agarwal from Sovelo Investments Managers LLP to add more on Accenture.
Yes, as rightly mentioned by Anisha, the numbers look like broadly in line, and I wouldn't read too much in the Q2 guidance because, as rightly mentioned, there is a lot of furlough in this quarter and also there is a holiday season club. As far as companies maintaining full year guidance range, and it has not even trimmed down the upper end. And if you see last few years record of Accenture, barring one instance, they have always beaten the guidance on a full year basis. So I would see this as a very positive sign. Also, remember that BFSI strength in order booking and growth clearly shows that it is always the first sign of revival in the economy. So I would read it as a proxy for revival. Also, the order booking numbers, if you see on a year-over-year basis, are looking very, very strong. Consultancy, generally, you will see maybe after this quarter that it will start showing. I think that it is a very, very recent set of numbers. Although, we have not seen fine prints of the numbers, nor we have listened to the management commentary in detail yet. But I believe that based on these numbers and based on the information we have right now, this is a decent set of numbers and nothing to worry about.
Well, that is the word coming in on Accenture, but let's switch focus to Japanese electronic giant Toshiba now, and they'll be delisting today after 74 years on the Tokyo Exchange, following a decade of upheaval and scandal that brought down one of Japan's biggest brands and ushered in a buyout and an uncertain future as well. The 14 billion takeover puts Toshiba in domestic hands after protracted battles with overseas activist investors that paralyzed the maker of batteries, chips, and nuclear and defense equipment.
And on to some exciting news. The biggest sporting extravaganza, IPL, is back in news. The two-day auction for IPL 2024 kicked off this afternoon. Yesterday, and ICIC World Cup Australian players raking in the top moolah. Australian pacer Michelle Stark created history in the IPL auction by becoming the most expensive player in the tournament. He was snapped by Kolkata Knight Riders for the record 24 crore 75 lakh rupees. Meanwhile, Australia's World Cup winning captain Pat Cummins has gone to Sunrisers Hyderabad for 20 crore. On the other hand, CSK has lapped up New Zealand players Daryl Mitchell and Rachin Ravindra. CSK didn't stop there. They bought Indian uncapped batter Samir Rizvi for 8.4 crores.
Well, that's about IPL, but with this, we're timed out on this segment. We'll see you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. Asia stocks opened higher. And when you look at Nikkei, you've got a 1.6% move coming in. You did have Japan stocks extending gains to another session because the country's central bank left its ultra-loose monetary policy unchanged at its final meeting this year. We discussed that earlier in the show. And, you did have that particular move moving that particular market. But when you look at ASX 200 also, you're seeing some kind of strength because you're seeing ASX 200 also up 0.6%. When you look at Hang Seng also, you've got a little bit of strength. You've got Hang Seng up about over 1%. And when you look at South Korea's Kospi also, it opened 0.7% higher. Now it's trading about 1% up. And when you look at implied, Gift Nifty, you're looking at a gap up of about 81 points. You did close yesterday around that 21,453 mark. So we're largely looking at a positive open this morning, Lisa.
So looking at a positive opening this morning. Thank you for that, Shreyansi. But
Welcome back. Thank you so much for staying tuned in. Well, we've seen a lot of action in the primary markets, and as we inch closer towards a new year, let's try and shed some perspective on the fundraising trends this year. QIPs have raised as much as 13,850 crores in December. Meanwhile, capital raised via IPOs stand at 8,300 crores. My colleague Somit is standing by with some interesting data collated over the years. Somit, over to you.
Well, if you see a lot of IPOs, QIPs and block deals have been rushing into the market, but do remember this is still not the highest amount that the market has raised via QIPs and IPOs, and so far when it comes to block deals also the selling amount done by the investors is still not the highest ever, but we will most likely by the end of this calendar year cross that mark that we had seen earlier back in 2017, something like that. Now if you see when it comes to the IPO trend in December, so far around 11 companies have either announced or raised funds via IPOs, and the total amount of fundraise was close to 8,300 crore rupees. And so far in this calendar year 2023, nearly 57 companies have managed to raise funds of close to around 49,400 crore rupees. Now of this 49,400, 42% was a fresh issue and 58% was OFS, where either promoters or existing investors have sold their stake in the company. When it comes to QIP, 9 QIPs has so far been done in December 2023, and the fundraise is close to around 13,900 crore rupees, and the amount of fundraise via QIP so far in 2023 is the highest that we have seen since 2017. Close to 52,000 crore has been raised so far, while in 2020 the amount raised was close to 80,800 crore rupees, and around 44 QIPs have so far been done in this calendar year. When it comes to the block deal data, around 8,700 crore rupees of block deal has been announced for today, and 2023 is expected to see the highest ever amount of block deals. Now currently around 3,71,000 crore rupees has been raised by sellers via block deals. 8,700 crore, if you add today, the amount comes to close to around 3,80,000 crore rupees, and a week to go by, so easily we should cross total amount of fundraise that we had seen back in 2017, that was close to 3,83,000 crore rupees. In 2023 so far around 13,250 block deals have happened currently in the market.
Well, that was quite an interesting data highlighted by you, Somit, on the IPO and QIP trends. But Pepsi India bottler Varun Beverages have announced that it will be acquiring South African-based the Beverage company. Now, this is in a move to expand their geographical footprints to South Africa. But can you share more details on this, on the acquisition, on the deal timeline? What is it all about?
Well, RJ Corp has been quite busy. That is the promoter company of both Devyani and Varun Beverages. Yesterday they announced an acquisition when it comes to Devyani International, and today they have announced an acquisition in the South Africa for Varun Beverages. Now Varun Beverages will be acquiring 100% stake in the company called the Beverage company for an enterprise value of close to 1,320 crore rupees. Now Varun Beverages has also kept an option open to get in another investment from another minority investor from a large equity fund going forward. Now this deal is expected to complete by July 2024. Now some details about this new company, that is the Beverage company. Now that is a licensed manufacturer and distributor of Pepsi, and it also has its own non-alcoholic brands that it markets in South African market. Now it has a franchisee right for Pepsi company in South Africa, Lesotho, Eswatini, and distribution right in Namibia and Botswana. The company has around 5 manufacturing facilities, while its FY23 sales volume stood at close to 117 million cases. Now of this 117 million cases, nearly 85% of the volume were for its own brand, of which 15% was for an energy drink, and only 15% of sales were for the PepsiCo brands. Now what's in it for Varun Beverages? What this acquisition offers Varun Beverages? Now it fast-track Varun Beverages plan and expansion in the South African market because of its ready capacity and the distribution facility. It also gives Varun Beverages the scope to improve PepsiCo's market share in the South African market, which is currently in low single digit. Now this acquisition has also been done at an attractive valuation of just 0.8 times its FY23 sales, and it presents a potential upside that we have seen for Varun Beverages in previous acquisitions also. Now in past, do remember Varun Beverages has a successful track record of increasing market share in new markets like in Zimbabwe and Nepal, where they started right from scratch. They have now a market share of close more than 50%, and South Africa market itself, if you see, has a potential to increase its Varun Beverages addressable market by nearly 25%. So keep an eye out for Varun Beverages in trade on the back of this new acquisition done by the company.
Thanks Amit, so absolutely, we'll keep an eye on Varun Beverages, but let's also switch focus to an RBI circular now. RBI has come out with a circular on transactions involving AIFs. Regulated entities have been advised to not invest in AIFs with downstream investments in debtor company. And if they're already invested, they need to liquidate the same within 30 days. Ankur Mishra is standing by with more details. Ankur, what can you help us understand about this circular?
Yes, the Reserve Bank of India has directed lenders to liquidate their position in AIFs if the fund invests in the debtor firm. Now, all these directions have been given by the regulator after there were several cases which was brought to the notice of the regulator that there was circumvention of laws, that there was loopholes which many of the AIFs were subscribing to, and hence that circumvention of law was being done by few of the fund houses. Now, as per new direction, the liquidation of such kind of investment in AIFs needs to be done within 30 days. And what happens if this does not happen within the stipulated 30 days time period? You have to provide 100%, meaning 100% provisioning needs to be done on any such kind of investment. Remember, SEBI's whole-time member had earlier highlighted that they have given a report to Reserve Bank of India on few of the AIFs who are not following norms, who are circumventing these kind of norms, and now Reserve Bank of India has come out with these regulations to stop such kind of evergreening of loans. Now we need to wait and see what happens to the entities who has actually flouted the norms, whether or not there is some action by the regulator on these firms.
Thank you, Ankur, for that. So, wait and watch approach on that circular. But moving on to Beverages, the EdTech giant under Think and Learn, they have reported consolidated losses of over 8,200 crore in FY22, and this was a significant increase from about 4,600 crore in FY21. Now, the consolidated revenue for FY22 that reached over 5,000 crore, and that was up from approximately 2,400 crore in FY21. So, it kind of doubled if we see in FY22. So, my colleague Anurag Joshi is here with more details on this. Over to you, Anurag.
Yes, so the latest set of numbers, consolidated losses in FY22 at 8,200 crores, and this compares to about 4,600 crores in FY21. Now these are consolidated numbers that have just come out. Now the company had officially released the FY22 numbers in early November, and that had happened after a lag of over a month because the company was supposed to release the numbers by end of September. Now, if you look at the revenues, now that has improved in terms of like in FY22, the consolidated revenues for Think and Learn, which operates the EdTech Beverages brand, that was over 5,000 crores. And this was compared to 2,400 crores in FY21. Now, these numbers come just ahead of the company's annual meeting of shareholders, which is scheduled for tomorrow, and that is going to give some kind of a color about what is the future direction for Beverages amid the mounting problems for the company, which has included the legal tussle with its lenders of the $1.2 billion Term Loan B facility. And more recently, just last month, the board of the BCCI, which is the cricket governing body, that had filed an insolvency petition against Beverages over past overdues. And in December, the NCLT has sent a notice to Beverages. So these issues are likely to come up at the AGM, which is going to give some kind of direction about the trajectory for the company.
Well, thanks Anurag for all of those details about the beleaguered EdTech company. But switching focus to power now, India in the past decade has successfully shifted from a power deficit to a surplus nation. And this was stated by the Power Minister in the Parliament. To delve into the strategy for utilizing this surplus energy generation, my colleague Bhavya Dua had this exclusive conversation with Ashish Upadhyay, who's the Special Secretary at the Ministry of Power, Government of India. Listen in to what else he had to say.
Power generation is a dynamic issue. Sometimes we are in shortage. When demand shoots up, we require extra power. and our aim is in long term and in short term. Our demand is met completely by the domestic production.
Lastly, what are the broader plans for power generation in the country? How would the government provide power to those parts of the country that are remote and not receiving electricity as of now?
We are increasing the presence of the grid, and the areas which are not covered by the grid will be covered by off-grid like solar. Ultimately, all households which were willing in 2018 have already been covered, and new households which are coming up, that also we are covering in near future. A lot of schemes are going on, and we are constantly working. It's a dynamic issue. New households come up, families grow, they split, then they require power connections, and we give them.
And with that, let's slip into a short break. More news and updates on the other side of the break, so stay tuned on the show.
Welcome back. Thank you so much for staying tuned in. Well, as promised, we also have the list of stocks that you should keep on your radar. And we have Ansh joining us in the studio. Ansh, which are the stocks that you're looking at on account of news flow?
So RVNL will be the first stock in focus for today's trading session, as KRDCL RVNL JV has secured the lowest bid for a railway station upgradation project, and the project value for which is around 123 crore. Apart from this, transformers and rectifier will also be in focus, as the company has got orders from Uttar Pradesh Power Transmission Corporation for transformers, and this project cost is around 118 crore. Concor and DB Schenker India is also in focus, as they have signed an MOU for collaboration in export, import and domestic businesses. Lastly, BPCL will be in focus, as company approved setting up of polypropylene unit at Kochi refinery with a gross project cost of around 5,044 crore. So keep an eye on the stocks.
Yes, Ansh, will definitely keep an eye on all these stocks. Thank you for highlighting that. But let's across to the metal sector. They have underperformed the benchmark Nifty this year, but could the tides turn in favor for metals? Will the prices of domestic steel inch higher going forward? And to answer all these questions, we have Ashesha joining in with all the details. Good morning, Ashesha. Take it away.
Well, yes, so the Nifty Metal Index has underperformed on a year-to-date basis. At a time when Nifty 50 has risen nearly 18%, Nifty Metal Index has rather underperformed with returns of nearly 12% on a year-to-date basis. But the big question now is, will the tide turn? Now, of late, global steel and global metal prices have seen an uptick. Aluminium, copper, steel, zinc prices have risen anywhere between 12 to 8% in the last 5 days alone. Let's talk about the ferrous space in particular. Global steel prices have risen nearly 1.5% in the last 5 days, and they've been on an uptrend over the last few months, but domestic steel prices have not risen in tandem. Higher imports, low exports, higher inventory at mills are the primary reasons why domestic steel prices have not risen in tandem with the global steel prices. But looks like the tide could turn in the coming quarters. Remember, domestic steel prices could rise on account of higher raw material prices. Both aluminium, both coking coal and iron ore prices have risen in the last few months, because of which domestic steel prices could probably inch higher in the coming couple of quarters. Apart from this, globally also globally steel prices have seen an uptrend, because of which imports have become expensive, and hence this could also make a case for a surge in domestic steel prices. Let's also talk about the key triggers for the metal space in particular. China's real estate meltdown continues. Remember, despite several measures that the Chinese government has undertaken over the last few months, Chinese real estate market and the impact of Chinese real estate market on the global metal market continues to have a negative impact. Apart from this, now we are also seeing Red Sea issue, because of which major global logistic players have started avoiding the Red Sea and the Suez Canal route, and hence perhaps exports of major steel players could also be impacted because of this. Remember, major steel players, the likes of JSW Steel, JSPL, export anywhere between 11 to 13% of their total revenue, and perhaps exports of these players could be impacted because of global geopolitical crisis. Apart from this, Morgan Stanley also came out with a note some time ago where they said that the underperformance that we have seen in metal stocks in calendar year 2023 could perhaps continue in 2024 as well. They say unattractive valuations, global macroeconomic concerns and higher supply than demand could be the primary reasons why while underperformance in metal stocks could probably continue in FY24. Meanwhile, they also say that domestic steel demand is expected to remain strong, but spreads are expected to remain range bound.
Well, absolutely. Thanks, Ashesha. So we'll definitely be keeping an eye on metals and we'll see whether the tide turns and metals start shining. But let's switch focus to the futures and options roundup. Ansh, how's that shaping up this morning?
Right, so let's start with Nifty first. Nifty touched 21,500 mark for the first time in the previous session. However, index faced strong resistance around this level, mainly due to heavy put writing positions around at this level. Let's see what happened in F&O segment. Open interest in Nifty jumped by around 8%, indicating a long build-up, which is a positive sign. Whereas on option fund, we are seeing very active call writing at 21,500, indicating resistance here. Whereas on the downside, we saw active put writing at 21,400, which suggests some support around this level. Now let's have a quick view on Nifty Bank as well. Actually, Nifty Bank had actually given a breakout from 7 session consolidation 4 sessions back, and now it's to have again got into a consolidation phase from last 4 sessions. In index futures, if we see for Bank Nifty, open interest went up by around 3.6%, indicating long build up here as well. Whereas on option fund, we are seeing very active call writing at 48,500, indicating resistance around this level. But this is still a positive thing because the resistance is still around 600 points away from the current level. Whereas on the downside, we saw active put writing at 47,700, indicating good support around this level. Now let's shift our focus to what FIs did. In index futures, they added 11,200 longs and they covered 2,800 contracts, giving a net addition of around 14,000 contracts on upside. And due to this, total long positions has increased higher from 60% to 62.3%. Also, if we see the net position of FI and index future, that has hit 5-month high actually. So in a nutshell, market seems to be consolidating at current level, and it needs to give a breakout from this range to catch a trend in either upside or downside.
Thank you for that, Ansh, for taking us to the F&O snapshot. But let's focus on the equities. Vedant Fashions conducted its management meet, but what are the key takeaways of the same? Well, Gaurav is here joining us with all that. Gaurav, what is the management talking on Vedant Fashions?
Yes, right. So Vedant Fashion, so B&K Securities met with the management of Vedant Fashion, and if you look at the stock performance, it has been one of the most underperforming stocks in this year, we could say, because the YTD performance, if you see, the stock has remained almost flat in this year itself. So what the management has highlighted is that they believe that the current situation is a little challenging for the company because there are some competitions going on and it is growing in the industry itself, but they still believe that there is scope to expand their footprints almost by 50% from here on, and they are keeping their focus remained on the expanding their women clothing category. The performance, if you talk about the performance of the products which are sold under Twame brand are still good according to the company, and the performance of the brand Manthan, which they have, will remain specifically in the D2C segment. But all in all, it seems that the management is also a little worried about how the competition is going to grow from this moment. So let's keep an eye on this stock and see how it turns out.
Well, absolutely, Gaurav. So we'll definitely be keeping an eye on that stock. But let's also look at Mantrapuram Finance analyst meet. Now, the management is confident of maintaining the gold AUM momentum as well. And in fact, they've also said that the competition in the NBFC space is under control. Vamakshi is standing by with all of those key takeaways. Vamakshi, good morning. Take it away.
Well, yes, Mantrapuram Finance in focus. The company did hold an analyst meet yesterday, and we have some important commentary that came through from the management. As for the management, 34 lakh crore assets under management are under the NBFC sector, and the sector continues to perform well in their opinion. Asset quality remains quite comfortable, barring certain select unsecured loans. Now, gold loan, which is their primary source of business accounts for almost 53% of their consolidated business, and this has seen an uptick of almost 8% on a year-on-year basis in the quarter gone by, and the management is confident that around 8 to 10% growth could be seen in this segment. Competition of NBFCs is also under control by protecting the customers and restricting yields to almost 21 to 22%. The underlying price momentum on the gold side, in fact, will lend comfort on both the growth as well as the asset quality for gold financiers. They believe that they will continue to on their strategy to de-risk the business and diversify into different product segments. So, as of now, their non-gold loan business share stands at 47%, and the company expects to scale this up over the next few quarters. They have also highlighted that the non-gold loan verticals have now to report profits. There has been certain stress in rural segment, but MFIs still continue to hold strength. In fact, the MSME vertical for the company is expected to be a very strong growth engine. Vehicle finance, the GNP has actually seen a marked improvement from 6.7% to 2.4% in the quarter gone by, and credit costs have remained below the 1% mark. They've also ventured into EV financing, and they are expected to increase tie-ups with dealerships. Asirvad Microfinance, well, the public issue is expected to come through by mid-Feb, and in fact the company has highlighted that post-COVID activities of existing gold finance customers have been slightly reduced. However, they will focus on return on equity delivery of over 20%. So largely those were all the important takeaways that have come through from the management of Manappuram Finance, and on the back of that, watch out for this counter.
Thank you, Amakshi, for that. So that was on Manappuram Finance, but that was all the time we had on this edition of Market Cafe. But stay tuned as we take all the action on the market. For now, it's a goodbye from me as well.